Hey, what's going on, everybody? This is Yusef Scott with the Mirrored Millionaire Forex Group, and I definitely appreciate you guys tuning into this video. As promised, I am going to be putting out more videos more often than I have been. I know that I've taken a short break and putting videos out, taking care of the home front, as well as getting the group where it is today. Just trying to grow, or I'm sorry, not trying, but just growing the Mirrored Millionaires Forex Group. So I'm constantly working diligently behind the scenes, getting everyone up to snuff and just growing the group. So what I wanted to do is, in my time away, I thought about um, talking about some of the most heavy-hitting topics that really needs to be talked about, and basically what that is the psychology behind trading forex. All right, and 2 points about the psychology, 2 parts about the psychology of forex. I really want to lean on today, and those being greed and panic, or let's say fear. All right, so let me I'm gonna give you guys a little background on myself, and then it's gonna be a easier segue into what I'm trying to get at, the point I'm trying to make. So for those of you that know, I've been trading for years now. I've started out in stocks, buying penny stocks, and I'm sorry, buying penny stocks and basically shares and of penny stocks, companies that are just brand new and they're looking to actually build value so that they can really grow. So I started off with there, a great way to make money. Um, I had then ventured into buying currency and binary options and all that. Then I stumbled upon doing forex. So let me just explain to you how this went. So when I got into forex, I was brand new to forex, but I had an idea of trading because I had been in stocks and I've dealt with currency. So I've understood the markets to a degree, at least I thought. So when I got into forex, I can remember the first time I traded. I know I'd deposited 500, probably a little bit more than $500 in my account. I know it was 500 something. It may have been 515 or 550 inside of my account. And to be quite honest, I did pretty well starting off. I was scalping, and within the first 30 to 45 minutes, I had taken my $500 or so up to like $1,800, 17, $1,800. Now that was a great day because that's a short period of time, and I've tripled my money. And lo and behold, um, 30 to 45 minutes later, I lost all that I profited. All right. And then by the next morning, I lost my entire account. All right. So I'm just going to give you guys a little idea. I'm going to break down what was going on during that time. So here I was trading, and I was trading Euro USD because that's where I started off with. I knew that it was liquid. So I started off with the Euro USD. As soon as I pop a trade open, I'm instantly in the money pretty much, and I'm doing well. So my account grew, and then I thought that I can do this all day. And but I had a voice that came into my mind, came into my head, and told me to shut down my computer and just go back at it the next day. Well, I didn't do that, and I kept trading and I kept trading, and I remember looking at my account and thinking, "Wow, I done made 3 times the amount that I have inside my account. I done tripled my account and then some." Well, I didn't shut my computer down. I kept going, and 30 to 45 minutes later, I lost everything that I had just gained. And then the next morning, I lost everything. By the next morning, everything my account was wiped out. I may have had a couple dollars in my account. Well, initially I was being greedy, and we all go through that. You're on a great run for a couple hours, and in the back of your mind you're thinking, you know what, I made enough, but the market is moving so well, and I think I can make some more. And then all of a sudden the market turns against you, and then one thing leads to another, and then you wind up not making as much as you thought or that you had planned, or you wind up losing some of the profit that you previously had. And that's exactly what happened to me. I was being greedy. I didn't shut down my computer when I had the thought come in my mind. I didn't shut it down, and I lost all of my money by the next morning. Now, during that time frame of me winning, I was very excited. Um, and in fact, I remember jumping up, yeah, I mean, really hollering, and I was just so excited about everything. Just, I've made all this money this fast, and I was like, this is unbelievable, because so many people had so many misconceptions about Forex. But I knew that I've been around people in before, and not the Forex markets heavily, but I've been around the financial markets to know that you can make money with these types of financial vehicles. So um, after the greed, then I went through, like a sense of, I started to panic once I saw the market going against me. All right. And when the market started going against me, I remember, um, I don't remember the volume I was trading at, but I do know that by the time I was done trading, when I realized that I had lost pretty much all the money that I had made, I was already trading at maybe three and a half volumes, something like that. So this is what happens. You're trading. Let's say you're trading at $5 a pip, and you're doing well. You're doing well, and then you say, what? If I can get it at $5, why don't I take it up to one volume? So now you're at $10 a pip, and you're trading. You're doing well, and then you're in on a buy, and then everything is going well until the market goes against you, and then you realize that now your trade is in a negative. Well, while you were trading at $5, you were pocketing the money, closing out your trades. But as soon as you put the $10 trade in, now that trade is out of the money. So now the money that you had once made on the $5 trades, they're being quickly exhausted by this $10 trade that's going deeper and deeper out of the money. So one of the worst things to do when you get into a losing trade is to not shut your trade down. Now, if you know anything about hedging, and I do have videos on hedging, awesome strategies on how to get out of a bad trade. But if you do not know how to hedge, the best thing to do is to shut down your trade. There's no need to keep trying to trade it, because all you're going to be doing when you're when you're watching your trade go deeper and deeper out of the money, is you're going to find yourself trying to throw in heavier volume so that you can quickly regain what you just lost. So, and that's exactly what I did. I was trading, and then I saw myself. I saw the market going against me. So instead of shutting down that bad trade at first, because in my mind I remember always hearing that what goes up must come down, and vice versa. So I figured, well, if the market turn around on me, eventually it'll go back up. So I didn't shut down that first trade. I let it just run while now I put in a trade going down. Well, guess what happened? When I put the trade going down, or in the opposite direction, don't know which direction it was originally, but when I put the trade in the opposite direction, the market went against me again. Now, mind you, this is on a 1 hour chart, and oftentimes when there's volatility in the market, the candles will at one moment be going, or one moment be bearish, and then all of a sudden it'll go bullish. So, and this happens quite often, so it's not something that's far-fetched. And this is exactly what happened. I was in going one way, the market went against me. I didn't shut down that trade, but I put in a trade going in the opposite direction. The market turned on me again, and then I found myself, when the market turned around on me again, and then I found myself all over the place. I had trades at different volumes, and then now my margin level percentage was taking a huge beating. Not only that, my equity in my account was suffering. So of course I'm panicking now that I'm gonna mess up and I'm gonna lose my money. I'm fearful and all that. And and then one thing that I realized is that if I had if I hadn't panicked, if I had just shut down my first trade, all of I would have had kept most of the money that I had lost, but I didn't. I panicked, and I started trading heavier out of fear of losing my account, and then all of a sudden it was just deadly. So what I wanted to share with you guys is that you must learn how to, if you're in on a bad trade and you see that there's no turning around, just cut your losses. It's better to, if you have a $500 account, or let's say a 17 or 1800 account, as I did when I made the first bit of money. The best thing to do is just shut the bad trade down, and then just take a breather. Take a moment, clear your mind. Take some time away from the market so you can regain your thoughts, and then go back at it once the market and your mind is reset to a neutral zone or whatever. Once you're back level headed and you're not looking at or dwelling on your losses, go back in, but you got to give yourself some time to really refocus, because otherwise you're going to be chasing your losses, and it's best to just let your losses go, because it's better that you can trade another day and have strength in the market and to be able to trade a little at a higher volume, rather than staying in the market and having to increase your volume with all the mental stress of losing, and wiping out your account right then and there. And so many times I remember, just kicking myself in the rear end, thinking to myself that, if I had just shut down this trade, like, Scott, come on, you know better. If I just shut down this trade. But today, I'm confident to say that I know better. I've learned from many, many, many mistakes, and now I want to share it with you guys and let you guys know, let you all know, if you're in on a bad trade, shut your trade before it becomes disastrous. And it's so easy to just lose $20 or $5 rather than losing a couple $100 or thousands of dollars or tens of thousands of dollars. So I just wanted to share that with you guys, because I know that plenty of you actually go through that, where you're actually trading and you make a bad mistake, and then I mean, something I remember trading before, and I remember having the market, I'm sorry, trying to close down a trade, and when you're trading in MT4, oftentimes you may accidentally, um, click on the wrong X for, you might click on the wrong trade to close. So then, whether it's a trade that's in a negative or a trade is in the money, you click on the wrong trade, it could really, throw your account into a frenzy. So, when that happens, oftentimes one would really panic, especially if you had, oftentimes, and this is something I'm going to get into in my, I have some hedging strategy videos that you guys can take a look at. I get into nice strategies where you can hedge yourself out of these bad trades. I go into a little deeper of how you can, basically balance out your account so that you can get out of bad trades. But what happens if you click on the wrong buy or the wrong sell? That's the thing about about hedging that I don't like, is that if you click on the wrong trade to close, you could really throw your account into a frenzy. So although it's a way that some people that like to trade, I know how to do it, but my first option is just to shut down a bad trade. Now, one thing that really that's very, very true and very important is that if you're trading and the currency pair, or the commodity, or whatever it is that you're trading, if you're familiar with that pair, or with what you're trading, if you are familiar with it, you should know whether or not, based on the equity that's in your account, the volume that you're trading at, if it's in the negative, if it's a bad trade, you should know whether or not, if the market, how far the market will probably go up, and how much negative equity it would draw from your equity, so that you can know whether or not you can hold that negative trade. Because oftentimes I do that. If I know that, um, if I let's just say, if I see that the market is turning around on me, and I might want to keep that trade open. I may not want to close the trade out of the money. I may want to just keep it open, because I know that the market's going to go, and it's going to reach this level, and it's going to turn around, and it's going to go right back, and it's going to take my trade right back into the money. So instead of me losing out on $1,000 or a couple $100 or whatever it might be, I might just leave the trade running, because I know that more than likely it's going to turn back around. It's going to go back in that direction, and realize profit. But the only thing is, you have to be very familiar with that currency pair, and then most importantly, you need to know how far am I expecting this market to go before it turn around, and if it does not turn around, will trading at this particular volume throw my account into the red. So that's the beauty of having a surplus of funds inside of your account, being able to trade at a certain dollar amount or a certain volume. Because if you do not have a certain dollar amount of equity inside of your account, you're trading at a high volume, you could really be in a world of trouble. So having $1,000 in your account trading at 10 cents a pip, it's not crucial to shut. It wouldn't hurt your trade. It wouldn't hurt your account because one particular currency pair is not going to go up straight up 1,000 pips, or even 10,000 pips, or 100,000 pips. It's just not going to happen. So you can bet your bottom dollar that it's going to eventually realize profit. Well, it may not be right away, it may not be tomorrow or next week, but it's going to turn around and go back in that direction. So, but it really all depends on the currency pair, whatever it is that you're trading. And that's why I stress over and over again, you must focus on, and you must marry that currency pair, whatever it is that you're actually trading. You have to do that. But before I get off into a long tangent, I don't want to bore you guys with my rant on Forex, as I can go for days just having the experience and knowledge. I want you guys to really get a knack for trading Forex, and to not allow losses to disrupt your thinking. And the best way to do that is just to shut down bad trades, save your money, instead of trying to work yourself out of it by increasing your volume and all that, going against your first trade, and trying to get back your negative equity on your first trade, and then just ruining everything. So until next time, you guys, I definitely appreciate you guys tuning in. This is Yusef Scott. Thank you so much. Take care.